Bo, I know you because I heard one of your interviews. You've done quite a few. I've come across your website, which will be listed at the bottom of this particular interview online. Um, what is your website, please, Bo?
It's gold 2020 forecast at AOL. I'm sorry, that's my email. It's gold2020forecast.com.
So, is 2020 the key point, do you think?
No, it's a very critical point within our world, but it's not the point. But I did pick that for a specific reason, and more importantly, is it's a direction that gold and silver and precious metals will all be going up into that time year. And so yes, it is a very important time in our world, but not the time point that many are looking for.
Your key area of expertise is the markets, okay, and also specifically looking at the what's the word I'm looking for? The security of funds via gold and silver. Is that correct? That's a terrible way of putting it. But basically, if I want to save my money, then I stick it in precious metals, don't I?
Yeah, basically, what I've become to best define what I do is I'm an analyst on cycles, and I study and I specialize in the cycles of gold, silver, and the world stock markets. So that's basically the best definition of what I do, or what I focus on.
But not only that, you also look at the cycles within the Bible. So you replicate biblical cycles. Now this is fascinating. You replicate biblical cycles and how they reinvent themselves, these cycles in the financial system. Is that correct?
That's exactly correct. It says in the Bible, this is from the Bible, that which has been will be again. There is nothing new under the sun. Okay? I've taken those words and this is my little modification on those words, not changing the Bible words, basically applying those words to the stock market. Okay? Life does nothing but replay itself at a different price point, but it's the same cycle. So how's that?
Okay, so I've listened to a good few of your interviews now, and I still don't understand how you manage to predict the rise and fall of the stock markets. Now, clearly, it's very clear from charts that are out in the market that the markets rise and fall whether they are in Australia, Hong Kong, or the United States of America or Europe. They all roughly do exactly the same thing, don't they?
Oh, absolutely. In our stock market index that we give our subscribers, we actually have one page that's a daily chart and another page that's a monthly chart. And you can notice on both pages, we have on those charts, we've got, I think, like 9 world stock markets from like India, China, Germany, Switzerland, just on and on, the United States. We've got 9 markets on there, and they're identical. Now, when I say identical, they're just identical in terms of their turning points. And all there will be is like some markets will be stronger, like some of the U.S. markets. And then you got some markets like Germany and Switzerland, some of the weaker markets. So they fall more at sometimes. Some markets will fall more at sometimes, and others won't fall as much. Just an example was like Germany. The DAX did not fall much in December, but then it caught up in terms of price in the month of February here. So into the early February, it dropped more aggressively. And that's when we had some of our talks, and I was saying, oh, it doesn't matter because the cycle is up in February, and you'll, as you're seeing now, the markets have rebounded off those early February lows. But yes, they're all interlaced because the bonds that were sold across the world went across the whole world. And so they all move together extremely well and closely. It's just a matter of, some are higher, we mean stronger, and some are lower in terms of price, in terms of weaker. But there is no change. So when they crash, they will all crash together.
So, Bo, you told me that the DAX was going to drop and then after a drop, which we saw from around 9,700 down to 8,600, give or take a few points here or there, okay, you told me that it was going to rise again all the way through the latter stages of February, and then it will turn again sometime in March, maybe week one or week two. That was my understanding of it, and we are currently, the DAX is now sitting at just under 9,600.
That's correct. When we did speak, I think we were speaking about this in December, or it could have been January, but I did say that where markets were supposed to roll down, the DAX was supposed to fall. It did. I know we were speaking in February, early part of it, and you were concerned that the markets are going to start to break and go deeper. And I said, no, it's not going to happen because there's still an upcycle, which we expected in the DAX into the end of February. And as as you look at the charts now, you're correct. The markets have bounced, and the next wave down after this bounce completes is supposed to be devastating. Or so that's at least what we're looking at, where it's supposed to get quite terrible.
So I'm also noticing, Bo, that as oil drops, the markets drop. So if we're expecting a devastating impact over the next, say, week to 10 days or whatever, something's going to happen, okay, then I expect oil to collapse. Is that a fair assessment?
Well, number one, there will not be like when I say devastating or severe. Let's even use the word severe, devastating crash. It's not going to happen like right away. It's like a wave. It has to roll over, and then fall, and then break. Okay, so it's not going to happen like right away. But it's going to happen as I did several interviews between now, and by the end of October of this year, it'll be all over. But the crash, it starts to accelerate after. Well, once March starts, the crash begins to accelerate to the downside. Okay, so that's probably a better way of stating it. Again, and the dates of the acceleration of the high and the low time points, those are specific time points that we provide within what we call our stock market index to subscribers. But then to answer your question about oil, when I was in Vancouver on the 24th of January, I did a video interview, and I specifically stated that the gold mining stocks bottomed on the 19th to the 20th of January. However, oil still had a down cycle because oil, and you're correct about what you just said, David, was oil is tied in with the stock market. Okay, so oil has not bottomed. So my subscribers know that as well too. But basically, oil has not bottomed. It will continue to fall, and it will fall with the dollar.
Okay, so you are saying quite clearly, and you have been very close to being absolutely on the money historically, but you're saying that this, from March 2016, we are going to see a downward spiral all the way to October.
All the way, and the bottom comes in between March and October. So without giving the exact time point out of the month of the bottom, I will say that by the time summer into fall hit, it'll be over. And then a new something is introduced because of the severe crash that occurred. So you're going to see something start, something new is going to change. But the point is between March and into summer and into the fall time, you're going to see markets collapsing. And in reaction, since you are out in Europe and in Spain, you will see the euro rise.
Interesting. The euro is going to grow. Why would the euro gain strength if the sorry for my ignorance, if the European indices, the DAX top 30 companies, are losing value?
Well, again, the extent of the rise, again, cycles don't give price, but I do know that the euro will move up with gold. Okay, so the dollar is in a down cycle, and so they're paired. So if the dollar's falling, the euro would rise in reaction because they're paired.
And how are you working this out, Bo?
What do you mean? How am I working this out?
Well, how do you know that these cycles are taking place? I know we've mentioned the Bible. We know everything's cyclical. We know that the Bible says that cycles repeat themselves. But how do you know?
Because I go back retrospectively, and when the cycle is incredibly active or correct retrospectively, you look at it forward. I know it's hard. The problem with the world is the world believes that everything's random and nothing is pre-programmed, pre-planned in life. But the reality is that our world we live in has been written thousands of years ago, and we're playing into a biblical cycle every day. And so to best answer your question, go back, and you've mentioned, we've made some interesting or successful forecasts. Well, we made those forecasts using biblical timelines. So, without getting into the details, but basically, I'll give you several examples. The gold cycle high and the silver cycle highs in 2011, we called to the exact day because they were identical biblical cycles, 1,267 days apart from the prior highs, and they nailed the exact day to the day. And then so then we also made forecasts for the stock market. I did an interview on July 20th, True News, and saying that the market topped today, and that's exactly what happened. Go back and look at the DAX or the U.S. markets, and you'll see the same thing. All the markets topped in the July of 2015, right on the 20th. And then December, we had a cycle low. The very, very first week, December 3rd of December for gold. We did an interview exactly on that date because our cycle count ended on December 3rd. We knew that should have been a low, and lo and behold, well, you can see from today at 1,045 on gold, you can see gold today is trading right around $1,200. So obviously, that was a critical inflection low point on the gold. And then the last point I can make is using a similar cycle, we were able to forecast the low on the mining stocks, which was in January 19th through 20th. And again, so to be able to forecast lows or high points to the exact day like that sometimes, and have 5 documentable points that can be proven, you have to put credibility to that at least, and saying that the possibility for the rest of the cycle to play out is pretty high.
So if the euro is going to grow in strength, what do you perceive happening to the English pound?
I haven't, to be honest, looked at the English pound, but I would suspect since it's been falling, it would probably rise temporarily or rise, because it's an opposite trade to the dollar. So we do have a down cycle on the dollar, so therefore I would expect the euro and likely the British pound to rise. But again, I didn't study or have a close look at the British pound chart recently, but I have been watching the euro quite closely.
Okay, and that leads us into gold and silver. So gold is more stable than silver, and silver is gold on steroids. What do you expect for the price of gold and silver over the next 3 to 6 months?
Well, number one is, the world is fixated on price, and to me, as a cycle analyst, I'm more concerned about time. So all I know is that right now, the bottom has arrived on gold and silver. We have years of an upcycle for gold and for silver, because once the bottom arrived in December of 2015, we've got multiple years now of upcycles for gold and for silver. In terms of price, we're looking long term, on the minimum side, $5,000. But see, those, because it's so far away, it's years away. If we get to that price target a lot earlier, then the price moves from 5,000 to 10,000. So it's more a matter of of how high each cycle high goes. There's multiple cycle highs that happen over the years to come. So depending on how high each high goes, then you can forecast how high the potential spike could, ends the final spike could end up going. But if you wanted just a conservative number, easy $5,000 on gold, long term, and it could be 10,000 or higher.
So with gold and silver, are these items that you physically that when I go and buy gold and silver, can I go and buy the paper that suggests that I own gold or silver, or do I need to physically hold it in my hands?
Well, it was interesting. What pirates used to do with gold? Used to bury it, right? Why would they bury it? Because they wanted to know that when they wanted to go get it, it would be there. And they drew a treasure map to it. The point was, it was money. It's always been money. And if you find any of those buried treasures today, they're still money, okay? But but anything paper is just paper, And so if you believe that you're holding gold because someone's gold is a physical asset, it's not paper. Okay, so I don't understand why people get so hung up on the paper side because it doesn't make papers for trading. So if you want to have fun with gold, then you buy positions with gold and you put paper positions on. But in reality, if you believe in gold, you should be holding physical possession of it because that's what it is. It's something to hold, not to think you hold because you hold a piece of paper that says you hold it. So I hope that makes sense.
Yeah, that makes sense to me totally. So I'm holding a stack of gold and a stack of silver. I'm not a pirate. I don't have a boat, and I'm not sailing off to some island with Johnny Depp. Thankfully, right? But I still got my gold and silver. What do? Do I dig a hole in the back of my garden?
Well, everybody has a place that they could do something with it. I don't. Well, it's not for me to tell somebody what to do with their gold, but if you have gold in your possession, whatever that means, possession, whether you have, a vault that you're storing it in, and you actually can go check on it and make sure it's there because you believe in this vault and it's a safe vault, or if you've put it somewhere, personally, and it's there, as long as you have control over it, that's what it's all about. It's not a matter of having a third party involved saying you have control over it.
Okay, so then we get to the point where I've got my gold and silver. Fiat currency and all paper value has collapsed. And I know that your key issue is about time. So what sort of time frame are we looking at when my $100 is worth zero and my gold is worth $10,000? What's the time frame on something like that?
Well, the long-term cycles could be between 5 and 10 years from now. Still, the U.S. dollar is not going to collapse. It's going to crash or have legs to the downside. The euro is going to go up, but ultimately it's going to come back down again. So all paper currencies are headed down. It's just that they take turns, and so the British pound, the euro, they've been falling for a long time now. And people say, well, because the dollar is so strong and the stock market crash, the dollar would gain strength because it's the only, the currency that actually holds real value. Well, no, it's the opposite of that. The dollar is strong because it has the farthest way to fall. The euro is the cheapest, it's the lowest, it has the farthest to gain in a crash. So euro will rise with gold, and so but the paper currencies are ultimately they're all headed in the down direction, and that's still years down the road. So don't expect this whole thing to one day you wake up and it's like, oh, it all blew up, and then paper is worth nothing. No, it's a matter of time, and it's going to still, yes, it will take a few years before this all starts, before paper currencies become cheaper and of less and less and less value. And as all that's happening, gold is rising and silver. Gold and silver are rising, are increasing in value against all world currencies. Okay, if you look at gold priced in euros, okay, it's already made some pretty significant highs here. Let me see if I can pull up one of my charts. Like gold priced in euros right now is already higher than it was in October. Let's see, yeah, no, in October, and in the Canadian dollar, uh, gold price in the Canadian dollar, it's already higher than it was all of last year, and it's probably 10, maybe 20% away from making new all-time highs. So gold will continue to rise against all world currencies, and and all world currencies eventually are all ultimately heading down, but they do take turns, and that's what is important to understand.
Okay, that's really interesting. So, when I get to the point that I've got gold and silver, and I've got also cash in my back pocket, but the cash can't buy me a loaf of bread, right? Clearly, I'm being slightly facetious here, okay? Because my normalcy bias jumps in and says that's never going to happen, right? It says it's never going to happen. It's
Sure.
never happened in my lifetime. It will never happen. I'm always going to be able to get food from the shops and petrol for my car and so on and so forth, right? But if I want to sell my gold and silver at that point, do I sell it for fiat currency? How does that work?
Well, you have to think about what what is gold right now. If I took an ounce of gold and I went a trip to, say we're in the U.S. right now. Let's say I took a trip to Singapore. Okay, well, I could take my ounce of gold, buy Singapore currency, and then I can purchase whatever I wanted to purchase. I can take the same ounce of gold. I can go to Europe and buy euros, and then I can transact in euros. So what gold does, it's irrelevant of the currency. It transitions you from gold in terms of money into all world currencies at any particular time. Does that make sense? So if you have gold today and you have 20 ounces or 100 or 1,000, whatever, if you have a handful of gold and you want to go buy something, okay? At that point in time in the future, there will be some form of currency or some form of whatever it could be, the euro, whatever the currency will be. You can transact by selling a unit of gold to purchase whatever currency is at the time. So it just transitions you and it keeps you in the game, and it preserves your wealth is what it does, because it allows you to because if all the currencies keep falling and you don't have any gold, how are you going to end up buying gold later on if the currencies are all falling in price and gold keeps going up? Because remember, gold's going to rise against all world currencies, and ultimately all world currencies are going down. And so you won't be able to buy gold later at any reasonable price. So by holding it now, you could then take pieces of your gold, sell it, and then transact with whatever you need to do at that point in time, at whatever the currency is at that point in time. Okay, so let's talk about the London FTSE. Um, the Looking at the daily charts here, going back to August, after the July top, it rolled down. Each high since August has been a lower high. We are expecting, actually, we did a future money trends interview exactly on December 3rd. On that exact day, we said the dollar should have, actually, sorry, the gold on December 3rd was expected to have made a major cycle low, and that was at $1,045, and that was the exact day that happened. Then we also said something very specific, that the world markets are expected to fall for 7 days consecutive. Well, the FTSE actually did that exactly. It fell and fell and fell for 7 to 8 days consecutive into the middle of December. Then it bounced up. The FTSE ran up to a price of around 6,300, and then it dropped again, and then in January, it broke the August low. It then rallied back up to February and again broke the January low in February. So the FTSE, again with all the other world markets, still has it's bounced and it's gone up since then. I'm not sure the latest prices on it, but regardless of where it is even today. Where by the end of February, it's going to start running out of steam. I did do an interview with Greg Hunter, and I specifically said, if you're not out of the markets, or done something, with your positions by the end of February, you will be out of time. So we're running very, very short on time here because today is February 22nd.
Bo, what do you mean out of the markets? Because clearly, if the market's going to crash, you want to go short the markets, no?
Well, what I'm saying is just being out of the market. Like if you're holding positions, hoping for the market to rally because you believe the markets are actually going to go up, then that will be your final time point. You need to be out. But if you're a trader, then yes, we actually have a time point. That we with the specific time point that we have in the month of March, where you actually, could, if again, not we don't give trading advice, we just give dates. But there's a specific date in March you actually want to go short, as you put it. Yes, that will be the time point to go short, and then you stay short until a specific time point we have later this year.
Okay, well, clearly everyone wants to know what those dates are, right? So, how do people get that level of knowledge? Because you're not going to tell me on this interview.
Well, that's the thing. Here's the thing: 90% of people don't need the dates. Okay, even more because the bottom line is, if you're invested in the stock market, you need to be in or out. If you want to believe in gold and silver, you should buy gold and silver. So you really don't. A lot of people don't need the dates. They just the information I'm providing is pretty amazing in terms of the cycle work we're doing. The people who are trading, who are in it, for specific trades for profit, well, then they would need the dates. But otherwise, in the high 90% of the population don't need dates because they're not that important. Aside from if you are a trader, you see what I'm saying? So if you are a trader and you really, really those dates are critical to you because they really are critical for trading, then go to our webpage gold2020forecast.com, and that will be we provide those dates specifically in what we call our stock market index, and so that's where we cover the exact dates.
And I've got to say, Bo, that you have been very, very accurate with your previous predictions based on the cyclical method of looking at the Bible. It's really, really bizarre, but you've been very, very close, haven't you?
You're right. Well, every time these cycles turn, it actually fascinates me every single time because it's amazing to watch history replay itself. It really, really is. And so when I put dates out and then they actually happen accordingly, you're right. It's fascinating, and the feedback I get from subscribers is pretty crazy. They're all really excited. So, but I do want to tell you, it's been coming along. Especially for the past 6 to 8, since last year. Since we were forecasting the markets would top out in July, every cycle we follow has been on the mark since last July. So that's like what, 4 or 5 turns we've had, major cycle turns to the day. So yeah, it's been coming along really, really, really interestingly, and it's been pretty wild and exciting to watch.
Yeah, it's fascinating stuff. So you're saying, if we just look at the DAX, you're saying sometime in March, and you're not giving away too much, but you have indicated to me that it's going to be sometime early March. The market will then start to decline. Clearly, the market does not go down in a straight line. It goes down, it goes up. It goes. There's only one thing sure about the market: it will go down and it will go up in a day. Right? That's for sure. But you're saying there is a downward trend for the DAX from March, and that could possibly take us all the way to somewhere near October. Correct?
Yeah, exactly. If you look at actually pull the DAX up right now, what you're saying is correct. We are looking at a down cycle on the DAX. The last close I had here on the DAX looks like it's 6,037, and that was dated. It looks like the 22nd, which is February 22nd today. Again, that is a lower high, so it's bearish. The high prior to that was on February 1st, and that was 6,100. So I don't think the DAX is going to have much more steam. Could it go higher? Maybe. I doubt it. I think it's going to fall going to pull back down again and then come back up one more time possibly, and then the fall begins to be into the drop to the downside. And yes, it's a trend. The trend since July for the FTSE and the world markets is down, and and the last leg of it is supposed to be pretty terrible, where the crash could be pretty dramatic. You know, looking at 30 to 50%. And it's as hard as it might be to believe, but for the FTSE, that target could go as low as 3,700. Pretty
Wow.
and down. Yeah, yeah. That and so whether it happens on this cycle, we'll have to see. But again, you're running cycles. At least we know the exact or potential time points that those targets could get hit.
Wow. Okay. So anyone listening to this, Bo's not giving direct advice for trading positions. He's just talking about the cyclical ups and downs of the various markets. And if you do go into the markets, then you do so at your own risk because it's a dangerous, dangerous game. You can lose more than you've invested. So be very, very careful. But still, Bo, that does suggest that there's quite a lot of money that can be made.
Well, that's the thing. See, when I look at cycles, you're right. I don't give trade advice or stock advice. I just give dates. Okay, but those dates they're based on historic cycles, and the cycle that presently is unfolding is a downward cycle, which has not nearly come to an end yet. Okay, and as a cycle ends, it becomes quite dramatic in its completion sometimes, or it's supposed to. So as this cycle ends, it's supposed to crash pretty intensely from a biblical standpoint. As hard as this might be to believe, this cycle completes over a 250-year-old cycle. It's that old. And if it's truly completing this cycle, it's a biblical cycle, which means that it's supposed to be just an absolute terrible crash.
Okay, so what can we expect on the streets of Europe when we have this terrible, assuming that we do have a terrible crash, and 2016 is the roughest year for a very long time? What can we expect? Can we expect higher unemployment? I know that I'm doing a business deal in Saudi Arabia right now, and that is very difficult to get across the line because all the budgets have been cut, as an example. I know I'm doing a business deal in Iran, and that's very difficult because although there's plenty of money there, there's still exterior US sanctions which make banking regulations very difficult, as an example. But what can the common man expect, Bo? Do you go that far?
Again, see, people ask questions like that all the time. You know, what's it going to look like? And see, the problem is, I look at candlesticks on a chart, and and then I run complex math calculations to see what time points arise into the future. But none of what I do gives events, right? And so, what's it going to look like? Well, the best answer is I don't know, because I don't know events and what it would look like. But then you can think about it. Well, if this world markets do crash to something like that, the better question is, what was it like in 2009? Right? That would be something you can look at. And on this crash, it's because it's a triple top on the FTSE. Okay, there's no coming out of it. Okay, so there's not going to be some kind of, they're going to announce something and it's going to fix it all. It's the FTSE is going to keep crashing for years to come. So if the FTSE is crashing, then basically, if you look at, let's apply that to real estate. Well, if the stock market crashed, the reason people were paying high prices for a real estate, for a home, for example, right? I know London, when I was there, it's sure not cheap. some of those properties.
No, that's right. I've got a property in London. That's correct. It's not cheap.
Right. Yeah. But imagine, and the only reason it's price high because people who've made millions in the markets can sell some of the market positions to buy a property, right? That's kind of how it goes. They go hand in hand. But if the market crashed by 50%, right, then how is somebody going to afford that same price tag on a home? They're not going to. So the price of the home will collapse with the stock market. And so if people were using their homes as ATM machines or being access cash, in other words, everything slows down. If they're waiting to buy a car or if they're waiting to buy a home, they're going to hold off on buying the home because they know next month it'll probably get cheaper. So they're going to hold off because everything keeps getting cheaper. Just example like a car, you'll wait on the cars because the next month will probably be cheaper again, and people are trying to unload their expensive cars because they can't afford them. So it's a spiraling, it's a spiral downwards. It happens very quickly.
This is true. However, I will counter that by saying London specifically is actually the circumference of London is relatively small, and there's a lot of people there. A lot of people are looking for a lot of homes, and there aren't enough homes for the people. They can't build enough places. So it's different, say, to America, which is huge and has had a huge amount of housing built across the entire country. But in specific areas, being a Londoner myself, I still find it very difficult to believe that housing market is going to collapse. But having said that, I've been wrong many, many times before.
And you could be right. Again, well, all I would say is I personally would wait for the low to come in on the stock market. That's what I'm doing, at least, right? To see where the low comes in on the stock market and then have a look around you. You understand?
Yeah, that's right. So that low could be around October. Is that correct?
Well, it'll be before October, right? But the point is, like I did an interview with Greg Hunter, it's between February and October, but by the time October hits, it'll be all over. Okay. So the point is that we wait. My best answer to your question is, you know, I have a timeline, so I'm waiting for my timeline to unfold, and then I'm going to have a look around and see what it looks like, because then you'll see how it all did transpire, what happened. Did the real estate collapse to that degree, or maybe it didn't? I don't think the real estate is going to collapse in all areas, like you're saying. Areas that have a higher demand might only drop a smaller,
That's right.
20%, right? You're saying, and other areas that have just, could drop 80% because no one wants to live there.
That's right.
So
Like
you're right.
Detroit. That's right.
Yeah, exactly. So everything's going to be relative, but to be looking to get into new transactions right now, when I know what's coming, personally looking at the cycles, to me it's better to wait for the low, and then have a look around and see what you want to do. In the meantime, hopefully, if you've been positioned in precious metals, then you'll have a lot of choices.
So when you say it's all over, can you just clarify what that actually means?
Well, when I say all over, it means the stock market major low would have completed, so the meltdown would have been over. Like, you don't want to catch a falling knife, as is, in trading. They say don't you don't want to catch a falling knife, which means you put a trade on, all of a sudden it just falls and falls, and it goes against you. So you want to wait until the market crashing, the massive energy to the downside completes, if that better explains it.
Yeah, that does. That's right. Are you willing to speak about your religious beliefs?
Well, I'll just tell you the best way I can tell you is that everything I've done comes from the Bible, and all the timelines, everything, and the more work I do, fully more confirms all the numbers. So every time a number continues to reproduce itself, it continues to prove its truth, its reality. And so all of this, if you have from a religious perspective, if you have a religious belief, it all ends great.
Okay, but you do believe that there is an evil power, as I do, that is dominating the world at the moment.
Well, bull and bear cycles. You have a bull and you have a bear. Gold is God's money, so gold goes up when it's God's time. And then the gold goes down in a bear cycle when he lets it. And, you know, that bear cycle ended on December 3rd, and the bull cycle began on December 3rd.
Wow, very, very powerful stuff. Okay, so we're in for a bit of a rocky ride, aren't we, for the next 6 to 8 months?
Right. To me, it's more a matter of not. It's never a matter of price. Everybody wants to talk. It's all a matter of time, and so I keep counting the time. I have time points, and so from a trading perspective, it's critical to know the time point if you're looking to, if you're going to put on a transaction, you're going to buy a home, right? If you know the markets are going to crash, as an example, right? And you really feel in your heart, yeah, it might happen actually, right? If you really believe it, why would you buy a home right now? Because it'll probably be on sale.
If you were going to sell your home, then you wouldn't do it this year. You'd want to wait till next year.
No, I think it'll be all too late by then. If you're going to sell your home, I think you're too late already.
Yeah, that's right. It's done and dusted, isn't it?
Yeah, I think if you're selling your home, I think the real estate market, as a general, has slowed down already. I
Yep.
don't think it's all that hot anymore. And once the markets crash, I think it's too late. I don't think there's much. And then that comes with just generally everything as well too. Once the stock markets do bottom, short term, then it might be a good time to look around and pick and do something from a transaction standpoint. But again, it's not advice. It's just from a timing perspective, everything's about timing in life, right? So if you're going to buy something, you want to buy it when it's on sale. So you want to buy, when does the sale hit? Well, the sale is going to arrive when the cycle makes its low, or after that time point. But until then, there's no sale, if that makes sense.
No,
See,
that
like
makes sense. Yeah.
silver and gold, they were all on sale for the past many years now, and into last December and this part of January, gold and silver were all on sale. Okay, and guess what? They're still on sale at this price.
They
They're
are,
they're
especially silver.
they're still on sale, exactly. And the reason, because silver has not broken out of its daily support resistance lines yet. So, gold's blasted through the 600 daily moving average and come back and it's bounced the ground, the 500-day support right now. But that's not going to last much longer. And then after, but once silver breaks out, takes out some major resistance lines, it's gonna outperform gold straight vertical.
Yeah, pretty exciting if you're on that side of the coin. Pretty dismal if you're on the fiat currency side of this transaction. And either way, it's going to be one hell of a ride for everyone, I think, around the globe.
Well, I agree. I think what you said is correct. I mean, one heck of a ride, and the reason is because it's going to be fast. The world is not. It's computerized. Everybody knows that. So when this starts to go, it's going to be quick. And so if you're not in gold positioned with holding physical positions, or somehow you're involved in gold and silver, you know, good luck and trying to get some. And when the move does happen, I don't know how easy it is going to be to get physical possession of gold and silver, because I truly don't think people are going to want to sell it, because the price is just going to keep going up and up. And so why would you sell something that's going up in value? Do you see what I'm saying? The price is exploding or going higher and higher. So why would you sell it? So there's going to be very few people or people selling gold and silver. So it's going to be hard to get your hands on it. And so if you haven't bought it already, it's going to be nearly impossible down the road. And and then your stock market and your markets, the markets are falling, and the dollars falling, and even if the euro is supposed to run to the upside, but I don't believe it's going to run nearly as powerful as what it's. Gold and silver are still going to outperform the euro. So gold and silver are going to be the asset class that the world looks to, and they will rise against everything.
Bo Polny, very, very powerful stuff. Thank you very, very much for your time. How can people get in contact with you? Because everyone's going to want those dates, mate. Everybody wants to know when the crash is going to happen and when it's going to hit bottom. How do people get hold of your inner circle information?
Well, again, go to our webpage. The dates, honestly, if people really want, if they're really important, they really want the dates, they are available through our indexes. The indexes are extremely low price. They're really not, not that much money. But, we do give the dates out, and I do, if there's ever an adjustment or something, basically every week I update. So if there's anything that changes slightly or I need to modify something, every week I update the charts and update my, what I would write within the updates on a weekly basis. There is one update for the stock market, and then there's another update for gold and silver, specifically for gold, and that's called a gold index. So, and that's at gold2020forecast.com.
Perfect. Well, listen, God bless you, mate, and thank you for your time. And I wish you well. I would say let's hope for the best, but prepare for the worst. Hey, I'm Herschel36. Thanks for listening to Truth is Stranger Than Fiction on the Beat 106 FM. Did you like it? If so, give us a thumbs up and don't forget to subscribe, people! Brought to you by justfinishitrecords.co.uk. Herschel36, where truth is stranger than fiction.